What's up, traders? Welcome out to tonight's webinar on candlestick analysis. This is Coach Tyler Craig from Tackle Trading. Getting the PowerPoint all fired up. Got the disclaimer out of the way. So I think we're on the same page here. I'm going to see if I can monitor the chat window on YouTube as we get started here. Let's see who's out there. James, what's going on? We got a D in the house. Gustavo's here. What's up, Gustavo? Daksha, Tim, Joe. Appreciate y'all for coming out. I am going to make it worth your while. The topic, as the name suggests, Technical Analysis 101, the basis of candlestick analysis. So we're going to be digging deep into candlesticks tonight. This should take about 60 to 90 minutes or so. Will be archived on the site, so you can come back and review it as often times as you need. Whether you are just getting started with trading or whether you're a veteran, I'm hoping that tonight's content will aid you. You don't have to know anything really about candlesticks. I'm gonna build your understanding from the ground up, and then for the more advanced traders, I'm going to show you how I use candlesticks in the context of everything else in technical analysis. So I'm going to try to put this in the right order so that you can see how it plays well with trend analysis and momentum and support and resistance. Okay. So smash the like button if you wouldn't mind. Give me a thumbs up and don't be shy. Chime in the chat section if you want to chat with the other traders. And let's do this. One more disclaimer for you. Keep in mind, we're all about education and information. We're not here to provide advice. I'm here to empower you to make your own decisions and to help you make more informed decisions. So I think that will be made manifest and obvious as we go through here. So I don't want to spend too much time on the disclaimer. I want to get into the fun stuff, but just remember that I'm not your advisor, not giving you advice here. As far as myself, I am a technician. Okay, so I'm a chartered market technician. I'm a member of the used to be Market Technicians Association. Now it's the Chartered Market Technicians Association. I've been using candlestick analysis for the past 15 years or so. Use it every day as I analyze the markets, and I've picked up a few tips, a few tricks along the way that I want to share with you. But before I get into those specific tips and tricks, got to get on the same page, right? I want to help you understand exactly how the candles work by themselves before we implement and add them to other things. Remember that tonight's discussion, tonight's webinar, as with all webinars offered on this channel, brought to you by tackletrading.com. We have a variety of resources that help traders. Let me just break down our educational ecosystem real quick. Always an open invitation to come join us on the inside. Now, these free webinars we do because we love you and we're glad you're here and we want to share with you. But we only do so much. We only do so much on the YouTube channel. We got a ton of stuff on the back end. We'd love you to come check out. We have podcasts. We have weekly reports that we put out with trade ideas and really good trade setups in the market. We do shows every week. We have educational courses. If you need to learn how to trade from the ground up, if you want to learn how to read a chart, if you want to learn how to trade options and futures and Forex, if you want to learn how to build trading systems, we've got courses on all of that. We have blogs that are put out every week. We have spreadsheets and journals and a trade center to help you analyze the markets every day. Okay, we have a Discord channel where our community can communicate and chat throughout the trading day, share ideas, ask questions, help each other out. That's what's all on the inside. bit.ly/join tackle pro. If you want to check it out, we'll give you a free membership. Do so. You'll be rewarded. You'll enjoy it. For tonight, that's as salesy as I'm going to get. Okay, that's your invitation to come join us. But let's get into the presentation. Here's what's on the docket. 4 things in particular. I think there's 4. Number 1, why are candlesticks the preferred form of charting? There are other types of charts. Okay, there are other methods of plotting the price of a stock over time. We favor candlesticks. We think they are more informative. We think they are just better than all the rest. But you don't have to take my word for it. I'm going to build your understanding of why that's the case. And I think you'll agree at the end here that candlesticks are the way to go. So I'll go through how to build a candlestick. How are they constructed? What's the body? What's the shadows? And then we'll go through a bunch of different popular candlestick formations. We'll go through the most common bullish reversal candles, the most common bearish reversal candles. I'll draw them out. We'll look at a bunch of live examples. And then I'll show you how to use candlesticks as you break down price charts in the context of the trend and support and resistance and patterns. And we'll really be able to put that into place. Okay. All right. Bharat's in the house now. Timothy, what's up? We got a Deeb here. Monique, Robert. All right. All right. All right. Gang is all here. Let's get started. Introduction to candlestick analysis. Here we're going to go into understanding price charts, candlesticks and momentum, and how candles help you identify pivots in a price trend. I've got my tablet. Okay, I've got my little stylus here, so I'm going to be taking, doing some drawings, taking some notes as we go. Okay. I would suggest, if you know how to take a screenshot, there's some pretty good slides in here. Take a screenshot, particularly the ones that show you all the different candle formations. But I'm gonna mark up these charts a little bit as we go and make this more interactive, more engaging for you. No, don't zoom in. Take me to the next slide. You can do this, PowerPoint. Ah, baby. Okay. 4 charts. I could have added 10 more probably, but let's look at the 4 most common chart types. Okay. Left-hand side, you got a line chart. I love line charts. They're very simple. They don't give you a lot of detail, but they do quickly reflect the trend of the stock. Is it trending up? Is it trending down? Line charts, very, very simple. We're gonna show you an example of how those work. The area chart is pretty much the exact same thing. Area charts and line charts, almost identical. I feel like the area chart was created somebody who really just wanted to make a pretty picture. They said, hey, what if we shaded all the area beneath the line? Make it like a mountain range. It'll look prettier. They're effectively the same thing, but you got some meat on that area chart. Doesn't look as skinny as the line. But it's the same thing, just plots the price over time. Then you get a little bit more clever, get a little bit more advanced. You go to the Western bar chart. Okay, the bars actually share more about what's going on than just the closing price day to day, which is what the line chart and the area chart do. But those bars, honestly, I have to squint to look at those bars. Yeah, skinny little lines, man. I don't know what's going on. I mean, I kind of do. But I need a magnifying glass for these dang bar charts. So, man, if there was a way to make it more visually appealing, if there was a way to make each candle's open and high and low and close stand out and pop a little more, that gets you to the Japanese candlestick chart on the right-hand side, an evolution of of the ones on the left there. And I think you'll come to agree with me that it is the best of the 4, as well as the other alternatives that aren't mentioned on here. Okay. So let's get to know the data here. I want you to pretend like these candlesticks are a minute chart. So on the left-hand side, you've got the market open. Market opens at 9:30 a.m. Eastern, and then it trades for 6.5 hours, and then it closes at 4 p.m. Eastern, right? So imagine this is the price fluctuating throughout a day. And each little squiggle, each little bar is maybe 1 minute or 5 minutes or something. But this is one full day from left to right. So look at these 4 pieces of information down at the bottom: open, high, low, and close. We usually use the abbreviation OHLC. I want you to write, I'm going to give you some assignments as we go. Keep you engaged. Write OHLC in the comment section, please. OHLC. Open, high, low, close. The opening price is just the first price right at the open. 9:30, ding, 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 ding. The bell rings, boom, stock starts trading. What is the price that it's trading at? What is the price that it's trading at? That's the opening price. And then you got a battle on your hands. Bulls and bears, buyers and sellers, pushing the price up, pushing the price down. There's 3 other major data points throughout the day. When you think about what information you would want to know, I would like to know how high the stock went that day. I think that'd be interesting. How far did buyers push it? What was the high of the day? How far did sellers press their advantage? How low were they able to push the price? That's kind of a key inflection point. And that's the point at which bears couldn't push it any lower. Bulls said, no, no mas. That's it. Can't go any lower, man. We're gobbling up the stock at this price. And then ultimately, they're battling back and forth and back and forth. And then ding, 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 somebody rings the closing bell. Turn off the machines, right? Done. The last price of the day, the closing price, that's the C. So think about it. It's like a story. Each day, a story plays out. I like the war analogy. It's a battle, right? You have a battle every day. And sometimes, you know, one party's winning and the other party's losing. And then you have this reversal of fortune. And then ultimately, like, who wins the day? Who wins the day? So the relationship between the open and the high and the low and the close, it's a storybook. It tells you a story in terms of what happened. A candlestick is like the summary page of the story. When you really understand how to read candlesticks, you don't have to read every page of the story. You can just look at that summary, and it essentially captures or just reflects everything really that's important that you just need to know. The cliff notes, right? I don't need to stare at a 1-minute chart to know what happened throughout the day. Just give me the summary. Just give me that daily candlestick. That'll tell me what happened the day. Okay. So let's use this OHLC, this open, high, low, close, now to create a candle. Let's use this to create a candle here. All right, you got 2 types of candles. Why do I have 4 on the chart? Well, because they can be colored different ways. Okay, we've got the Christmas theme. This is the most popular, the Christmas theme. You've got up days in green. You've got down days in red. That's pretty intuitive, right? Green for up, red for down. Some charting platforms will plot them as white and black. White for up, black for down. I don't care what color you use, okay? Completely up to you. I'm just telling you that the most common is going to be like green and red, something like that, okay? So 2 parts really to a candle: the body and the shadow. The body and the shadow. Sometimes the body's called the real body, which I don't really understand. I mean, there's no fake body candles going around, but whatever. You got a body to the candle. That's the box part, the rectangle part. And then you have the shadow, which is sometimes called the wick, to continue the candlestick verbiage here, the candlestick nomenclature. The upper wick, the lower wick. You want to call it a wick, call it a wick. You want to call it a shadow, call it a shadow. Same thing. Upper shadow, upper wick. Lower shadow, lower wick. That's the little tail at the top and the bottom. It's a little tail at the top of the bottom. Okay, so where does the open, high, low, close come into play here? Well, the open on an up day, think of what is an up day? You opened low and you closed high. Otherwise, it wouldn't be an up day, would it? If you opened and you went up, 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 up on the day and you closed higher than the open, by definition, I'd say that's an up day. So if the color's green or white, then it means you closed higher than the open. Well, how do I measure how far apart the open versus the close was? Well, they build a body between the two. That's the rectangle. Okay. What about the high and the low? just because we opened here and closed here doesn't mean that those are necessarily the highest point of the day or the lowest point of the day. I mean, I'm kind of interested in the details of the story here. I don't want to just know this is who was in control at the beginning of the day. This is who ended the day in control. I kind of want to know what happened in the interim. Like how far did bulls push it? How far did bears push it? Give me that information. That's important to me. Well, just draw a line up to the high of the day and down to the low of the day. How about that? So if you didn't open at the low or close at the high, you're going to have a line, a wick, a shadow up and down to encompass the entire range of that day's price action. So once again, if I were to draw this white or green bar, you opened here. At some point you went down because you had a lower shadow. And then you went up, 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 hit the high of the day, and then you came back down and closed here. This would be like the intraday price action of the green bar. So the body, you got open, close. That's your body between the open and the close. And then you got a little wick showing how low you went, and a little wick up here showing how high you went. This candle is essentially this candle right here. Okay. That's the summary page. The body or the candle is kind of the summary. And then the blue line is the story if you were to look at the details. Okay, what about a down day? What's the difference in the red bar? Well, I mean, it's pretty intuitive. The high and the low aren't any different. Okay, so the high of the bar, the low of the bar, that's going to be the wick. The only difference is on a down day, you close lower than you open. Bears won the day. So I opened here and I closed down here. It's a down day. Let's make that visually, quick to be able to tell. Let's make it a red bar. If you close lower than the open, it's a red bar. So the red bar would have been basically we opened here on the day. At some point, we went up to here. We went down, 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 and then we came back and closed right here. Well, how would you draw the bar? Well, the body is the difference between the open and the close. Make a box. And then at some point, we did go higher, so let's draw a wick there. And we did go lower, so let's draw a wick there. That basically is that bar right there. So the purple line just kind of tells you what happened throughout the day, right? Throughout the day. Okay, we clear? That's how you build a candle. That's how you craft a candlestick using open, high, low, close. OHLC, that's the 4 data points you need to make your own candle. Now, I'm curious, how would open, high, low, close play out on the other chart types, the Western bar chart, the area chart, the line chart? Let's take a look at that. Let's take a look at that. How about the Western bar chart? Not as sexy as the candlestick, gonna be honest. Kind of a plain Jane chart here. There are 4 data points, though, in the Western bar. Well, what do you think about the colors here? Do you think green's probably going to be the up day again? And red's probably going to be the down day? Yeah. So what happens is they put a little horizontal line on the left side of the bar to represent the open. They put a little horizontal line on the right side of the bar to represent the close. And then they just draw the line height, right, is the high versus the low, the range of the day. So what happened on this green bar? We opened, we went down at some point, and then we went up, 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 and then we fell off the high and closed right here. Does that look familiar? It should, because that's the same thing that happened on the candlestick. This is actually the same bar as the candlestick we drew. It's just showing you in bar form versus candlestick form. I don't know about you, but I find that candlestick more informative than this bar. What about the red side? Well, notice that the bar, again, on the left side, that represents the open, but notice how that's higher than the close. So on this guy, you opened here, You went up at some point. You went down at some point, but then you bounced off the low and closed here. You opened high, you closed low. It's a red bar. Okay. One too far, I think. Yeah. So that's your green, that's your red. I don't want to spend too much time on this because I'm not big into the bar charts, but that's how they're structured. How about the line chart? How does open, high, low, close play out on the line chart? It doesn't. The only thing the line chart cares about is the closing price. They say, hey, I don't care about the whole story. I don't care. Fast forward, who won the day? What was the closing price? $50. Okay. Plot a line or put your today's data point at 50. Okay, tomorrow, what was this? I don't care about the story. Who won the day? Stock closed at $49. Okay, that's all I need to know. $49. So let's just connect the dots. Yesterday was 50. Today's 49. Close to close. That's all we care about. Open, don't care. High, don't care. Low, don't care. Just give me the close, man. Cut to the chase. Simple, yeah. Pretty easy. Scant on details. Light on details, in other words. Good in a pinch, but if you really want to dig into the details, line chart's not the way to go. How about an area chart? Samesies. Open, don't care. High, don't care. Low, don't care. Just who won the day? Where did we close? Day after day, what's the closing price? What's the closing price? What's the closing price? Connect the dots, and let's make it cool. Got to be visually stimulating here. Let's shade underneath. Make myself a nice little mountain range. Boom. There's your area chart. There's your area chart. Okay. All right. So there you go. OHLC. 4 different charts. Now you know the difference. Now let's dig into the candlesticks. Okay. Grab your camera, ladies and gents. This is a pretty chart here. Take a snapshot if you want. Okay. This is essentially the summary page of all the major candlestick patterns. Okay. We're going to go through these one at a time, but the one on the left, you got bullish 1 bar, 2 bar, and 3 bar patterns. And then on the right, you've got bearish 1 bar, 2 bar, 3 bar patterns. Okay. And then in the middle, you've got essentially both. A little collection of both. Okay. Going away in 5, 4, 3, 2, 1. Snapshot, snapshot, snapshot. See you later, buddy. Now let's look at each one of these in greater detail. I'm going to draw some pictures. Before I do that, though, I want to go a little bit deeper in terms of the summary here. Okay, really, there's 3 kind of core categories, you could say, of candlesticks. You've got small body, single candles. Small body, single candles. Small body, single candles. So little doji candle, spinning tops, those go in that category. Then you have shadow-based candles, which I would call wick-based candles, right? Wick-based. Some kind of wick at the top or the bottom that implies a bullish or bearish signal. And then you have large body reversals. Bigger candles, maybe have a little more oomph, a little more emphasis. There's a variety of those as well. What I really like about learning the candles, I don't care if you know the names. You know, I'm like that line chart. Open, don't care. Low, don't care. Just what's the close? With candles, it's like, what's the name? Don't care. As long as you can tell me what it means. What's the implication? That's far more important than being able to razzle dazzle with the names. It's cool to know the names. Okay. I had to learn all the names at one point. I got tested on it. But honestly, on a day-to-day basis, I don't care as much about the names. It's the implication. What's it mean? What's the story of the day? That's what matters more. That's what matters more. So let's look at a few of these single candle patterns. Let me draw some of these. Okay. Let's start with the doji, probably the most readily recognizable candle because it has no body, has no body. What happened, doji? What happened to you? What's the story? Well, how about open, high, low, close? Was this an up day or a down day or sideways / neutral? The doji. Open, high, low, close. Looks to me like we closed right near the open. That looks like a neutral day, stalemate. So if I'm drawing a doji, if this is a daily doji, and I'm zooming in to a 5-minute chart to see how we squiggled throughout the day, I already know what I'm going to find before I look at the magnifying glass and zoom in. We open right here. Now, I don't know if we went down first or up first, to be honest. Okay, I'm going to assume we went down first. Down, 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 down. And then we hit the low of the day. Okay, that's so far right here and right here. And then what happened? What happened, bears? You were so promising in the morning. You were totally in control. And then you screwed it up. You wrecked it. And the stock went back up, 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 all the way to the high of the day. You're like, bulls, you're so impressive. Well done. But then as I'm clapping for the bulls, they fumbled. And you went down, 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 ultimately ending right where you began. This would be maybe a 5-minute look at what this daily doji reflects. Stalemate. Now, is that bullish? Is that bearish? Well, it depends on where it forms, which we'll talk more about here in a minute. But that's what a doji might look like intraday. Okay. All right. How about the hammer? How about the hammer? What I like about the hammer candle pattern here is we've kind of told you where it would form. We've kind of told you where it would form. See these bars coming down, 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 hammer, up, up, up. Okay, this is a bullish reversal formation. What does a hammer candle tell you? What's the story? You opened here. Here. Did you go down at some point throughout the day to the bottom of the wick? Yes. You puked it up in the morning. Oh, gross. Yuck. Yuck. And then turned a corner. Found a bottom. Bulls come firing back. They say, nope, go back up. Go back up. Go back up. And then you close at the high of the day. So good. Well done. Well done. That is a hammer candle. Do you see how that would play out on this daily chart here? I mean, that's pretty impressive, right? That looks bullish, smells bullish, sounds bullish. Hammer candle is a bullish reversal candle. One of the more powerful ones. Because you had such an extreme change in character between intraday or middle of the day morning to the end of the day. Did anybody see the stock market on Friday looking at the S&P 500 on a futures chart? Did you know we had a hammer candle on the S&P 500 on Friday? Yeah, let me show you. Let's take a look. Take a quick look here. /ES. Got to go to a daily chart. 6 month, 1 day. Zoom in here. What do you think? What do you think about Friday's candle? Didn't the market look disgusting Friday morning? I mean, it was gross. It's like, all right, come on. I mean, going into the holiday weekend, this is how you want to end the week, huh, Bulls? Okay, fine. You ugly. You know, and then we just did so much smack talk. They're like, yeah, no, we'll grow a spine. Like we'll make a comeback. And by the end of the day on Friday, you end with a hammer candle. It's like, I take back everything I said Friday morning. My bad, right? You reversed. You came back up. You closed strong. Well done. Well done. Nice hammer candle on Friday. Would have been a different story going into the weekend were it not for bulls showing up. Right? Okay. That's the hammer candle. How about one of these bear reversals? How about one of these bear reversals? Over on the right side. A shooting star. Doesn't that shooting star look kind of like the hammer flipped upside down? Shooting star looks like the hammer flipped upside down. Look, every bullish candle pattern has a bearish equivalent, which kind of makes it nice, right? There's a bear counterpart to every bull one. So every time I teach you a bullish pattern, you can kind of flip it upside down. Say, oh, so the inverse of that would be kind of an equally bearish setup or pattern. Yeah, that's right. That's right. So this shooting star, what happened? What happened? I like how this draws the stock leading up to it. The price up, up, up. Tried to go up, then came crashing back down and down and down. So think about that bar on that day. Okay, stock actually in this context gapped up, opens here, and just continues ripping like it had been ripping the prior 4 days or so. You're like, oh man, gorgeous, keep going. Love you. Chef's kiss, keep it up. Like you just love it in the morning. And then the stock's like, nah, I got a sick tummy. Like, I'm not feeling great. And then bleh, just down, goes below the open, right? And closes. It's like, what happened to you? You looked so good in the morning. What an ugly reversal. Shooting star. Okay. No bueno. No bueno. Bearish. So, you know, that has bearish implications. Okay. This is a potential bearish reversal candle. This is a potential bearish reversal candle. Okay. I'm not going to have time to go through all of these. But can I go back for a second on this wick idea here? The shadow-based candles. And I'll just tell you in general, lower wicks, if you get wicks at the bottom of the candle, okay, things like this, those are bullish. And now do you understand why? When you get those lower shadows, why is that bullish? Why is it bullish? Stock went down, then it came back up. Stock went down, then it came back up. Stock went down, then it came back up. Right? It's like you have these buyers down here, right? Buyers, bulls. They're like gobbling up supply. Buy. And then the stock goes down again. They're buying, buying, buying. It's like, knock it off, sellers. Like, get out of here. We're not going to let you break this level. This is a level of demand down here. Lower wicks is bullish. Lower wicks are bullish. What are some examples? Well, do you know what I find interesting? So Friday on the S&P had a lower wick. Friday on the S&P had a lower wick. Okay. Do you know another lower wick right here? That was a really long shadow. That was a really long shadow, right? So was the market on January 10th gross? Oh yeah, it was really gross. I mean, this thing was down at 45.70. And then by the end of the day, it rallied back to 46.60. It was almost a 90-point intraday rally. Right? Impressive. Lower wick. Impressive. Lower wick. A couple of lower wicks there. Impressive. Right? Impressive. Right here, a cluster, a quartet of lower wicks at support. So those lower wicks at support tell you something. And then the inverse of that, you could say, what about when you get an upper wick? Right? What about when you get an upper wick? What do those mean? Right? What do those mean? Well, those are bearish. Those are bearish. It's a sign of an intraday reversal. Stock goes up, sells off. Stock goes up, sells off. Stock goes up, sells off. Bears are like, get out of here, man. This is our turf. You got supply up here. And it's an area of resistance. Okay, it's bearish. Bearish. By the way, the color on here, the gray versus the black versus the white, don't read into the gray for now. Okay. Just assume two colors. There actually could potentially be four colors, but I don't want to, that's like candlestick 202. Right? Right now we're candlestick analysis 101. So just assume two different colors, ignore the gray. Okay. Let's go to double candle patterns. Double candle patterns. Two candle patterns. All right, let's start with the bulls. Let's start with the bulls here. Bullish engulfing. Do you see, so black white is the same as red green, right? So down day, up day. So what's the black / red here? You opened, at some point you went up, you went down, and then up, and then you closed. That's the black one. Okay. And then the white one, you open down here, you trade lower, you rally up, and then you close right here. Do you see how the green bar completely swallowed or engulfed the little red bar? Can't even see. Where's it at? Red. He ate it. How? Well, I mean, think about how you would feel if you're a bear. Think about how you would feel if you were a bear. I mean, you thought you were Mr. Hot Stuff the prior day. You're like, I'm in control, right? And then bulls like pat you on the head and they're like, you're so cute. And this thing rips higher, completely engulfs. Every seller from the prior day is losing. They're all underwater. They don't feel very good. That's a pretty epic rejection of the bearish sentiment from the prior day, right? That's a pretty powerful bullish reversal candle, okay? And you can imagine, like, if the bears were in control the prior couple of days, down, they're feeling smug. And then bulls come in and boom, like massive upside reversal. It's like, oh, okay. I mean, I guess we won't be so whatever about this stock. Bulls are fighting back. Bullish engulfing. Nice bullish reversal signal there. The bullish harami is kind of the inverse. Okay, it's the inverse. And it's still bullish. I don't think it's as compelling as the bullish engulfing. But the idea here is big down day. Again, I'm drawing this first bar, open, up a little, down a lot, back up, right? There's the red bar. And then the green bar is just kind of a change in tone. First of all, the stock gaps up, and then it stays up throughout the day. And volatility slows down a little bit. Volatility slows down a little bit. So again, it's a potential change in character here. Presumably you had down day, big down day, and then small green up day. Change in momentum, change in character, a quieter session, could be potential reversal. Could be potential reversal. Okay. One more. Actually, how are we doing on time? Let me skip that last one. On the bear side, bearish engulfing, bearish harami. Do you see how those two would be the same thing flipped around? So the bullish engulfing, or sorry, bearish engulfing. Where's my mouse? There it is. All right. So presumably up day, and then opens, rallies up, closes, and bulls are smug, right? They're like, oh my gosh, we so awesome. And then the next day the stock gaps up. They're like, oh my gosh, you bears suck so bad. And then it just, okay. And that's the next day. Completely envelops or engulfs the prior range. Every one of the bulls from that prior day is now losing money, essentially. Okay. So sharp rejection, sharp, reversal or change in fortune often precedes a drop. Dark cloud cover is similar. You just gap up that next day. So white bar here or up day, open, down, up, close here. And then you gap up the next day. Bulls are giddy, right? You gap up and then you sell off. That's what that next bar would be. And that red bar kind of hangs overshadows that prior day, kind of ominous. Okay. Often you'll get downside reversal after that. Okay, so those are some of the 2-bar reversal patterns that you see. In terms of, I'm just looking at the question here. Einveres 37. What time frame would this be to make a decision if it is bearish or bullish? You can get these on any time frame. This could be a weekly chart. The bullish reversal signals on a weekly chart would be bullish for the weekly chart. This could be a 5-minute chart. The beauty of candlesticks and really any signal you learn in technical analysis is it applies across any time frame. My assumption and my default is I use the daily chart. So when I see these signals on the daily chart, that for me has implications over the next couple of days. So for instance, you take a look at the S&P 500 having a hammer candle on Friday. That makes me a little bit optimistic coming into this week. Okay. But as we'll see, one bar is not enough. You don't want to just look at a candlestick and exclude everything else. Really, this is a piece of a bigger puzzle. And so you learn the candlesticks individually, and then you start to put them in the context of trend and support and resistance and momentum and moving averages. And then it's just kind of one more thing that maybe clues you in on what could happen next. Okay. Because the thing that I don't like about the chart right now of the market, yeah, we had a hammer candle on Friday. I'm willing to give buyers the benefit of the doubt going into this week, but the trend isn't all that fantastic right now. Doesn't look great on the NASDAQ. Doesn't look great on small caps. We're below the 50. We're below the 20. Good hammer candle, sure. Is it the best technical buy the dip setup I've seen? No. And so those other things matter. Those other things matter. Okay. As for whether you trade off of this, so okay, got a hammer bullish candle, do I buy immediately? Completely depends. Completely depends. Okay. Typically you're waiting for the next day. Sometimes I'll place trades on the reversal bar. A lot of people will wait for the next candlestick to see what happens. But I mean, honestly, it depends on the other factors too, though. Like for instance, let's say that you get this bullish engulfing right here, but the stock is in a downtrend. And then, you know, here was your black bar. And then you got the bullish engulfing. And then the next day it trades higher. And like, well, bullish engulfing candle and then an up day, should I buy? I don't know. Do you buy downtrends? Like, is that a rule you have? Are you concerned at all with the fact that it's in a downtrend? I would be a little bit concerned. That's not really a bullish engulfing candle I would trade that I would take, right? On the other hand, if the stock was in an uptrend and just pulled back 3 days and then formed a bullish engulfing candle at support, I'd feel a lot better about it. And I probably would buy it on the engulfing candle or the next day when it goes above that day's high. Okay, I'll get more into that, but that's the short answer. Okay. The reason there's a red candle on ES is because the futures open on Sunday night, right? The cash market opens Monday morning. The futures open Sunday night. Well, everything got pushed back a day because of the holiday today. So right now it's as if we're Sunday night. The futures are trading right now. ES is open. It is trading. It's basically where it was at the end of the day on Friday. Okay. But you are starting to see that move. Whereas if you looked at like the S&P, you won't see a candle after a Friday's candle because the S&P doesn't open until tomorrow morning at 9:30 a.m. Okay. So that has to do with the fact that we're looking at futures versus the cash market. All right. Great questions, guys. I love it. I love it. Were there any 3-bar? Yeah, the 3 bars, I want to get more to the practical stuff. So I'm going to call it good on explaining the theory behind these candle formations. Let me talk about pivots for a second. So pivots are a change in direction. They tell you something about supply and demand. They tell you something about who's in control. And candlestick analysis, I think, can help with this because these reversal patterns by definition occur when there's a change in the balance of power between buyers to sellers or demand to supply. So consider the swing here on the left. The stock is rising at the beginning, up, up, up. Demand is greater than supply. Agreed? That's why the price is rising. Well, there comes a point at which demand is no longer greater than supply. Maybe now there's an equilibrium between buyers and sellers. So the upward thrust, the steam kind of runs out, and then you get to an equilibrium. Notice how there's a pair of kind of doji looking candles here, narrow bodied candles, showing slowing momentum, showing a stalemate. And then you get this down gap, gross. You closed here the next day, puked it up in the morning, and then now supply is greater than demand. Bears are more powerful than bulls. Sellers are in control, and the stock goes back down. Okay, so the candlesticks kind of helped clue us in that there was some resistance here, right? This is a resistance level. And the reversal patterns occurred near resistance. Okay, a little spinning top there. Now, you can see it the other way too, right? What about a downswing? So demand, or excuse me, supply is greater than demand. Sellers are in control. Down day, down day, down day, down day, down day. But then look, you get some bottoming tails cropping up here. You get some smaller bodies. Okay. Another tell is look at the daily candle high. lower high, lower high, lower high, lower high, lower high, lower high, lower high. And then, whoop, changing character, higher daily high. We pivoted. We found support down here. Supply equaled demand. And then demand takes over. The stock goes up. Okay. So those pivots, those swing highs, swing lows, those are important parts of reading a chart as well. And understanding where the candlestick is forming in relation to those pivots can be very helpful as well. So momentum, just to put a fine point on this, big candles show strength and momentum. Okay. So when you're getting these big bars, buyers are in control, and they're in serious control. Big range, a lot of movement. Well, look, nothing lasts forever. Okay. The market ebbs and flows. Swing trading, swings, upswings, downswings. It's a good way of thinking about market behavior because that's how things work. So what is a telltale sign that this advance, this upswing, is slowing? Well, maybe you get some smaller bars. Now, does this mean the stock has to go down? Higher low, higher low, higher low, higher low, but slowing down. Do we have to go down? No, we don't have to go down. Maybe it pauses for a few days and goes higher. Have you guys seen the energy sector over the last 2 weeks? You've seen big momentum and then some smaller bars. And just when it looks like energy is going to pull back, it goes up again. So even if this had like a black bar or green versus now a red bar, you're like, oh, gonna roll over. Not necessarily. It's just the momentum right now is pausing. Now, in this particular example, yes, I have the thing rolling over. Okay. But sometimes they pause and go higher. Okay. What makes candlesticks sometimes frustrating is there's a lot of noise. There's a lot of noise with price action day to day. Okay. Candlestick analysis, it only goes so far. Okay. For instance, Friday, you have a hammer candle on S&P futures. And so somebody comes in to Monday and they're like, look, I'm so bullish because that hammer candle on Friday. And then the market goes down and they're like, oh, candles don't work. And it's like, well, wait a second. What's your expectation? Is your expectation that the signals have they're infallible. They're always perfect. They always work. That's not the game we're playing, right? They give us clues. Try to give us an idea of what the path of least resistance is. Try to tell us when there's a low risk versus a high reward. They tell us when things have changed. Okay, it's not a crystal ball. It's not a crystal ball. And so I think as you progress as a trader, even though you can learn all the candlesticks, you can learn the best practices and everything, you just need to get more comfortable with the uncertainty of the market and that there's a certain amount of noise, and something might work most of the time or more than half the time. It doesn't mean it works all the time, right? So as for the energy example, speaking of something that's been showing a little bit of slowing up momentum, like take a look at this, for instance. So this is the energy sector, XLE. Big green bar, a lot of momentum. Okay. Really didn't have any wicks, opened at the low of the day, essentially closed at the high of the day. I didn't emphasize this candle, but it was in our slide. It's a Maribozu candle. Next day, gaps up, rips higher all day. What does this candle kind of look like that we talked about, that I named today? So gaps up, rallies up, sells off throughout the day and closes at the low of the day. Gaps up, bulls in complete control in the morning, pukes it up, closes at the low of the day. That bar looks like, remember, it's the bearish counterpart of a hammer candle, looks kind of like a shooting star. And yet, did XLE go down? No, it gapped up the next day. Pretty impressive, right? So there's an example where I'd say, hey, didn't confirm the next day. Like, had you waited until the next day to see if we kept going lower, it would have saved you from maybe, getting into a bad bear trade or getting knocked out of a bull trade. Okay, little bit smaller bars, the last two bars up there, and then boom, rips higher. Rips higher. And then two small red bars. Oh, losing steam a little bit. Boom, rips higher again on Friday. Relentless. Okay. So some of these, yeah, they're potential, slowing in momentum, but it doesn't mean the stock has to get crushed. XLE over the past 2 weeks, I think, has been a good example of rally, take a breather for a day, rally, take a breather for a day or two, rally. Look, extended moves, strong moves, momentum-driven moves can continue, but conceptually, there's no denying when the bars get more narrow that you're seeing some slow. Okay. And then the same thing happens on the downswing. Down bar, big down bar, big down bar. Less, smaller down bar, smaller down bar. I mean, look, it's pretty obvious. The bears are losing steam a little bit here. Doesn't mean the stock has to bounce. No, it doesn't have to do anything. Okay, I wouldn't be surprised if it bounced. I wouldn't be surprised if it paused a little bit. The downward momentum is slowing. Okay, and then you get your reversal. Oftentimes we'll use the high and the low of the bar to really kind of be the tell. So in a downswing, if it's clean, and they're not always clean, you're making lower high, lower high, lower high, lower high, lower high, higher high, higher high. Well, that's the change in character right there. Right? That's the change in character right there. So, in an ideal world, you'd always have follow through once you get the change in character. Sometimes it gets choppy, but if you're looking for confirmation, it's usually breaking above prior bars high or breaking below prior bars low, something like that. Right? Something like that. Okay. So that is the last educational slide. Okay. So I would like to go live. I would like to go look at some charts for the next, 10, 15 minutes or so, and then we'll start to wrap up. Okay. As I'm going through these live charts, I want to prep you by giving you my breakdown, candles in context. What is my hierarchy as I go through a chart? A lot of you members of Team Tackle already know this. Okay. But let me show you where candles lie for me. Okay, so this is Coach Tyler's. Let me zoom in a little bit here. Coach Tyler's hierarchy. I can spell it. Of charting. This is my pecking order. Okay, I will tell you, candlesticks is not first. Candlesticks is not the first thing I look at. Okay, I did a message we do daily emails at Tackle Trading, our Tackle Today. And one of the messages was, don't forget the forest. Okay, don't forget the forest. The candlestick is a tree. Don't put too much emphasis on a single tree. You'll lose sight of the forest. So candlesticks don't come first when you look at a chart. What comes first is trend analysis. Maybe looking at the momentum of the trend, the relationship between pivots. I want to know that first. Okay, and then second, I will look at support and resistance, which really go hand in hand with looking at the pivots. Where's the floor? Where's the ceiling? Look, if I get a doji candle, which is a potential reversal candle, in the middle of support and resistance, and the stock is chopping sideways, do I really care about that doji candle? No, it's insignificant. It's meaningless because it's in the middle of nowhere. Location matters. So where are we at in relation to support and resistance? Then I'll usually look at moving averages. Then I'll look at volume. Sometimes I switch those two. Sometimes volume is 3 and moving averages is 4. Number 5 for me is candlesticks. It's candlesticks. Not 1, not 2, not 3, not 4, but 5. Right? And I know, some candlestick lovers might be saying, how dare you? 5th? They get no respect, apparently. No. I love candlesticks. Okay. I love candlesticks. Just don't want to mistake the tree for the forest. All right. Don't want to mistake the tree for the forest. That's my hierarchy. So as I look at a chart, that's how I break it down. What's the trend? What's the trend momentum? Where's support resistance? Where's my moving averages? Any clues from volume? And then what is the last couple of candlesticks? So like I'm incrementally going big picture, narrowing it down. Because a candlestick is like, what happened today? What happened today? What happened yesterday? What happened, just the last couple of candles is like, what's going on right this second? Well, that's like here and now, man. And here and now is important, but only in the context of how it plays into the bigger picture. Trend and momentum, big picture. Support and resistance, like where's the next floor and ceiling? A little closer. Moving averages is kind of part of analyzing trend. And then volume and candlesticks is like right here, right now. Are we seeing signs of buying or selling? Are we seeing signs of accumulation or distribution? What do the candlesticks say? That's like, nitty gritty. So anyways, that's the breakdown. Okay. That's the breakdown. By the way, Greg, I think you asked about the slide. Can pro members get that PDF slide? Yes. Yeah, I will. If you go to tackletrading.com, we actually had 2 PDFs available that show bullish and bearish candlesticks. Okay, so if you go to the Tackle Today, right here, and then you scroll down and you look at like January 14th, when bears dominate. Down at the bottom, boom, boom, boom. Ah, crap. It was the one before that. It was the one before that. There was 2, and one of the days the chart was, don't forget the forest, right? There's my message. Don't forget the forest. January 13th. Was it that one or the day before? I might be one off again. I was one off. Sorry, I'm going to get to it. I promise. Okay, how about this? Bearish reversal candles, bullish reversal candles. January 11th and 12th. Those 2 days, now I am confident. Process of elimination here. Bearish reversal candles, you scroll down. You go to the chart of the day, candlestick cheat sheet. Okay, it says download the bears candlestick cheat sheet. If you click on that, you will see basically the same ones that are in the picture. Plus, you got a sweet, sweet picture of a darling little bear here. Okay, and that's a PDF. So that one was the bearish reversal from January 12th. Tackle Today. And then January 11th, Tackle Today was the chart of the day was the bullish version. So you scroll down in that one to the chart of the day right here, the bulls, download that bad boy, and you'll get the PDF of that one. There's your hammer, there's your dragonfly doji, there's your bullish harami, bullish engulfing. You get all those. Okay. So you may not have caught those on the first pass. You look, we occasionally drop some beautiful gems and insights in those Tackle Todays. So those two you can grab there. Okay. Okay. We got the context. We got the candles. Let's look at some charts. Okay, let's look at some charts. Look, there's a slight delay here. I don't see your comment. You don't hear me until like 10, 15 seconds after I've mentioned it. But what I would like to do, is take a look at some charts. So you guys give me I don't know. Look, 10 minutes. I'll do as many charts as I can in the next 10 minutes, break them down using today's lens of candlestick analysis. You give me the ticker, okay? And let me start with some indexes. So I'm going to start with the NASDAQ. Okay, I'm going to start with the NASDAQ here. Remember my hierarchy. If I just look at Friday's candle, what does this look like? I actually did not mention this one in particular. What is it when you have a red bar and then you gap down and rally and close well within the bar's range? That is a bullish piercing line. May not be a perfect version of it, but I would call that a bullish piercing line. So you say, hey, Tyler, the NASDAQ had a bullish candle on Friday. Should you buy it? Well, take a step back. I don't make a decision based off of one tree. I want to look at the forest. What is the trend of the NASDAQ right now? Well, we made a lower pivot low. We made a lower pivot high. It's below the 50. It's below the 20. The NASDAQ is in a downtrend. That's one strike against buying it. Where's support and resistance? Well, we found support on, I don't know, whatever this bar's low was. That's support, and here's resistance. We're in the middle of support and resistance. Well, that doesn't make me super excited about buying it. That's two strikes against buying it. How's the volume look? I actually like Friday's volume because that's an accumulation day. I also don't mind the volume on this bar too. So I don't see anything negative about the volume. Moving averages are negative because we're below the 20 and the 50. That's three strikes against it. Three strikes against, and then I have one bull signal, which is Friday's candle. You think I'm going to buy the NASDAQ? No. Nope. You look at the weight of the evidence, too much going against the NASDAQ, notwithstanding Friday's bullish candle. It's not enough for me. Now, does that mean I'm wrong if this thing goes up over the next 7 days? No, it doesn't mean I'm wrong. It's not a matter of whether you were right or wrong in any one instance. It's a matter of whether you're going to be right or wrong over time. You give me this setup a million times, I think the odds are against me. I'd rather go find a candle formation in a setup where over a million times I'm right most of the time, and I'm not that confident with the NASDAQ. Love Friday's candle. Don't love the rest. Not good enough. Can't trade it. All right, next one, AMAT. Okay, what is AMATs? Just real quick, what is this candle formation? Red bar, green bar, 2-bar pattern. It's a bullish 2-bar pattern. It is a bullish engulfing. Those bears were feeling so smug after Thursday. Thursday's candle was a dark cloud cover candle pattern. AMAT gapped up and got smushed on Thursday. Dark cloud cover candle on heavy volume. Gross. If you asked me how I felt about AMAT on Thursday, I would have said gross. Rejected. But then one day later, bulls are like, no, you don't. And look, we gapped down on Friday, and this thing has a massive engulfing candle. That's also a Marubozu candle. AMAT, impressive. Like great rejection of that dark cloud cover. Now, would I buy it? Well, again, it's not about the individual candlestick pattern. Normally, if you just say, Tyler, close your eyes, bullish engulfing, would you buy or sell? Well, I'd buy. It's a bullish candle pattern. But give me more, man. Tell me more of the story here. What's my hierarchy say? It says, well, first you look at the trend. Okay, I mean, I feel pretty good about this trend. It's kind of trekking higher, right? I mean, it's not the strongest trend, but it's moving in the right direction. You got support down here. You got resistance here, and we just broke out. I like breakouts of resistance. We're above all the moving averages. I like that. The volume patterns I actually like. I mean, look, I didn't like Friday's distribution bar but I feel like the consistency on the high volume up days is enough to negate it. So look, man, I feel a lot better about buying AMAT than I do about buying the NASDAQ. The weight of the evidence is far more compelling in AMAT than it is in the NASDAQ. Doesn't mean it has to work. Doesn't mean I'm guaranteed to make money. But based on the weight of the evidence, based on the hierarchy, I like what I'm seeing in AMAT. So far, so good. Okay. All right. What's the next one? Next one was, I got the chat window on my phone, which is why I'm looking down here. Marathon. I missed Marathon, John. Let's look at MRO. Okay, Marathon. What's the candlestick pattern here? I don't know that there is one. I don't know that there is you can call Friday a Maribozu candle. Basically opened at the low of the day, went up all day long, closed at the high, right? Closed at the high. But is this a reversal bullish? Remember, I focused on bullish reversal candles. Well, this thing's been going up for 2 weeks, so it's like there's no bearish evidence to really reverse per se. It's just strong, nice bullish candle. Do I buy it because it has one bullish candle? No, I never do. What's the trend? The trend is up. Like it. Where's support and resistance? I mean, this thing has gone up so stinking much. It's got to be closer to resistance just by virtue of how far it's gone up. If I had more time, maybe I'd look at the weekly time frame. But my only quibble with energy is just that it's run a lot. I think we can all agree with that. Everything energy related has just run a lot over the last couple of days. Crude oil is coming up against resistance. So look, I mean, I like Marathon, but I don't feel like chasing, quite frankly. And look at the last couple of bullish patterns. Specifically, the last couple of bullish candles, right? Bullish candle, dark cloud cover. Big bullish candle, 2 red bars. Big bullish candle. I'm not saying that it has to do what it did the last 3 times, but this is stair-stepping higher. I don't know. I mean, this type of pattern I personally don't trade. I wait for a pullback or a pause. If I were to try to trade it, then I wouldn't go a full position here because I want to have the ability to buy if it does pull back more shares. So it'd be like a partial position. Or maybe you momentum trade it with a tight stop. That way, if it starts to pull back, you bail. I find energy a little tricky just across the board. Some of these are just so extended that it's hard if you're not willing to sit through a pullback to buy. So, all right, one more and I got to bounce. You guys give me way too many, which I surely appreciate. Monique, let's do Lucid. Okay. What's the candle pattern? I don't know that Friday was a specific candlestick pattern. We formed a doji at resistance. We pulled back 1 bar, right? We pulled back 1 bar, and then we get a green bar. I mean, could it be finding support here? Maybe. Could you buy above Friday's high? I mean, that'd be my trigger if I was buying the dip. Is this a super compelling reversal candle? Not really, just because it closed off the high, right? And so it's just kind of So I don't know that the candles are giving me anything too compelling. I do like that breaking Friday's high would get you above the 50-day moving average. So this one's okay. Doesn't scream by me, but I don't see anything I hate about it. The volume pattern looks good to me too. So root for it to bounce above Friday's high, and I think it's fine. Okay. Okay. So let's summarize here, guys. I feel like, and maybe I'm biased, I feel like we've done a pretty good job. If you go back an hour ago, okay, 75 minutes ago, okay, and you think about your understanding of candles in the context of trend, my hope is that we've moved you forward over the last 75 minutes, and your ability to understand the context, where candlesticks lie in the hierarchy of charting, the basic reversals, the basic structure. Look, hopefully this has been an hour, 75 minutes well spent, and you've been instructed. Look, sometimes I get to the end of a discussion, I'm like, oh my gosh, I bombed that. I hope they got something out of that. I don't feel that way tonight. I feel like we've had a really good discussion, and always appreciate you guys coming out. Let me jump back to the PowerPoint. I want to just mention one or two more things, and then I'll let you guys go. So what did we learn? Why candlesticks are the preferred form of charting, how to craft a candlestick, bullish reversals, bearish reversals, and then the context, right? That was the last piece. If you liked what we laid out tonight, come check out the inside of Tackle Trading. There's all sorts of cool products that we offer that help you elevate your understanding of the financial markets. I run a trading lab. It is the Team Phoenix Trading Lab. We have a dedicated Discord channel that the team uses to discuss trades, to get feedback. Every week we meet in our trading lab live room where we talk through trade ideas and we analyze the markets. And I essentially let you look over my shoulder and see what I see and give you, real-time market analysis. You can come check that out. My team is Team Phoenix, the Team Phoenix Trading Lab. You can find that in the store tab of Tackle Trading. We also have coaching. If you feel like having a one-on-one coach is something you need to elevate your trading, to take you to the next level, you can check out our coaching program. And then we got a sweet team that'll do some consultation with you. If you want to talk through the different products we offer, maybe find what's a good fit for you, you can come check out the consultations. tackletrading.com/schedule-consultation. And our team will help you build an education plan to take full advantage of all of our resources. Okay, so enough with that. I appreciate you all for coming out tonight. I always enjoy being with the team. Appreciate your participation in YouTube as well. Come check us out on the inside. And it's been Coach Tyler. I'll see you next time.